Good morning, students. Welcome back to this session on audit. So today we are going to start with a new chapter that is about audit of PSUs. Okay, yeah. And after this chapter, we also plan to cover liabilities of the auditor. Yeah, so this is the agenda for today, and we are also expecting that both the topics will be completed today. Yeah. All right. So first of all, we should briefly discuss about the PSUs. So it's a specific type of audit. I'm calling this to be a specific type of audit because certain specified types of entities are now getting involved and which are called as public sector undertakings. So far, in terms of whatever audit approach we have discussed, though it will not change even in case of PSUs, that will continue to remain same. But there are certain peculiarities which the public sector undertakings will have as compared to any other company. Now, because these are public sector undertakings, they have stake of the government involved in them. They are also more of controlled by the government rather than a scenario wherein a private setup is involved. So when we say private setup, so we are talking about those investors wherein the stake of government is not there, because some of the entities which are controlled by the government will have a complete different mechanism of working as compared to how a private company would be working. Okay, yeah. Now considering this, for the audit of PSUs, it therefore becomes important to first of all understand the working approach, or you can say the systems and processes of the PSU, the way they operate, because only then we can get on to the audit strategy in relation to PSUs. Now, because the PSUs are controlled by the government, that's why there are certain points in respect of PSUs which are going to be different as compared to a private company. For example, in terms of various activities that they will undertake, because it will be controlled by the government, this will also be having certain public interest involved. It will not be purely for commercial purposes as we may see in case of a private company. So this is one aspect. Secondly, there are a lot of authority matrices which would be set up. So if we look at the government mechanism, the way government operates, there are a lot of authority matrices which are generally set up. Only and only when all of those authority matrices are followed, then a project can be executed. Without that, a project is generally not executed. So the flexibility in terms of not following that is generally rare in case of such type of entities. So this is another very important aspect which the auditor needs to consider. Yeah. So that's why for PSUs, one point which arises is about the change in the approach or change in the audit strategy of the auditor, which may or may not help the auditor. Second is about certain specified types of audits which may be prescribed in relation to PSUs over and above the audit of the financial statements, which may be supplementary to this or which may be in addition to that as per the requirements of the law. So we will also have a discussion on that aspect. Yeah. Now if we look at the government company first of all, because this is another league of companies which is currently being discussed under this PSU. So government company, basically we can say a company which is under the control of the government, and which all companies will get covered over here. So if we look at this chart, this will include the companies which will have 51% or more of the paid up share capital controlled by the government. Yeah, it will include subsidiary company of a government company. And in terms of the government, what all government can be considered? So one is about central government, so that will be considered to be government. Second is any state government or the governments. And third will be wherein it is controlled partly by the central government and partly by one or more of the state governments. So that is considered to be a company which will be called as a government company. So now let's quickly get through some of the requirements which is specific to the government companies, which is specific to the PSUs, or which is specific to this government setup as a whole, and then we'll get on to the audit procedures and the various requirements related to audit. Now in India, audit of the government companies is performed by an independent constitutional authority. What is that called as? CAG, Comptroller and Auditor General of India. So if we look at the audit of government companies, so it's the CAG. And again, if you'll see, this authority is required to be independent because that's the premise. That's the premise on which audit is based. Because if the authority which will be conducting the audit is not independent, then the audit will lose its relevance. So that's why even if we look at this another body, what is the most important aspect that we are required to consider? Independence. So this aspect of independence, as you can see, this is used everywhere. Wherever audit term will be used, independence has to be maintained. Only then the audit can be considered to be free from bias. Yeah. And this CAG, which we are saying will conduct or will perform the audit, will do this through Indian Audit and Accounts Department. Now the Constitution gives a special status to CAG and contains provisions to safeguard his independence. So there are certain provisions which are contained because of which his independence will be safeguarded. Because again, if we say it's an authority which is independent, eventually that will be controlled by the government. And because eventually that will be controlled by the government, so its independence may be jeopardized. So what is it that has been given in the Constitution through which its independence is safeguarded? So let's understand those points quickly. Appointment of CAG is by the President. There's a special procedure for removal of CAG only on the grounds of proven misbehavior or incapacity. Salary and other conditions of service are determined by the Parliament. Okay. And of any other authority or body as may be prescribed by or under any law made by the Parliament. CAG's Duties, Powers and Conditions of Service Act 1971. So there is a specified act defines these functions and powers in more detail. On the advice of the CAG, President will prescribe such form in which accounts of the unions and states shall be kept. So this is all about those government authorities. Audit report of the CAG relating to the accounts of the central state government should be submitted to the President, Governor of the state, who shall cause them to be laid before the Parliament or the state legislative assemblies. Okay, yeah. So these are some of the provisions around this. And let's look at the organizations which becomes subject to audit of CAG. These are all government organizations, all the union and state government departments and officers, including the Indian Railways and Posts and Telecommunications. This is one. Public commercial enterprises controlled by union and state governments. For example, if we look at government companies and the corporations. Next, non-commercial autonomous bodies and authorities owned or controlled by the union or the states. Next is about authorities and bodies which are substantially financed from the union or state reserves. Now, as around the audit of government companies, so there is a special arrangement for audit of companies where equity participation by government is 51% or more. Now the auditors of these companies will be chartered accountants. Here the auditors are chartered accountants, but they will be appointed by CAG. They will be appointed by CAG. And the CAG will give them the directions around the audit. Okay, audit will be conducted by those chartered accountants or the firm of chartered accountants, but under the directions or as per the directions of the CAG. And CAG will also be commenting upon audit report of those auditors. Which auditors? Which have been appointed by the CAG. In addition, so one is appointment. So we can say this is one appointment. Number two is giving the comments on this. Number three, CAG will also have the right to conduct a supplementary audit of such companies and cause test audit if it considers that necessary. So over and above what would have been done, if CAG requires something more, then CAG can also get that done by the same firm or by a different firm. Okay, now this is one part which will capture in more detail as we move forward, and this is the most important part as around the audit of the PSUs. Okay, now moving further, let's quickly talk about this audit board setup in case of commercial audit. A unique feature of audit conducted by Indian Audit and Accounts Department is the constitution of audit boards for conducting comprehensive audit appraisals of the working of public sector enterprises. These audit boards associate with them experts in disciplines relevant to the appraisals. They discuss their findings, conclusions with the management of the enterprises and their controlling ministries and departments, because these are the, you can say, sort of senior management or sort of people who are involved in the decision making. So that's why all of these people are discussed in relation to these matters. The results of such appraisals are incorporated by the CAG in his reports. These audit boards have no separate legal entity and they work under the supervision and control of CAG. Scrutiny of annual accounts and audit reports thereon by the Parliament as a whole would be a task, considering their diverse and specialized nature, besides imposing excessive demands on the limited time available to the Parliament for discussion of these issues related to national importance. Therefore, Parliament and state legislatures have constituted specialized committees. What are those committees? Public Accounts Committee, Estimates Committee, Committee on Public Undertakings, to which these audit reports and the annual accounts automatically stand referred. So in a way you can say it's a delegation of work. Delegation in terms of the review or in terms of checking by some of these types of committees. So we can just quickly go through some of these committees as to what all they have been doing. So quickly on to the first type of committee, Public Accounts Committee. So what is this committee? It's the duty of this committee to satisfy itself that the monies were disbursed legally on the service or the purpose for which they were applied, that the expenditure incurred was authorized, monies disbursed legally, expenditure incurred authorized, and that reappropriation has been made in accordance with the provisions made. Now in these cases, because the government is involved, that's why, unlike in case of any other company, what you will see is that there's a fund which is coming in and which is required to be spent over there, spent over somewhere, or maybe spent in a project. And these are all large funds. These are not small funds, because all of these things are related to utilities of the public. For example, construction of a dam, construction of a road. Now, in relation to this, therefore, generally when we'll be discussing all of these types of committees, etc., you'll not see any sort of revenues coming in. So what will happen? Government will provide a funding. So that's why, what is the interest of the government in this case? That the funds which the government has proposed or has provided are being applied for the right project. So that's why all of these committees will try to ensure that the application of the funds is in the manner, the way government it requires it to be. Okay. Moving on to the next committee, Estimates Committee. This committee examines the estimates with a view to report that economies, improvements in organization, efficiency, consistent with the policy underlying the estimates may be affected, suggest alternative policies, examine whether the money is well laid out within the limit, and suggest the form in which the estimate shall be presented to the Parliament. So it does not comment upon a policy approved by the Parliament, but where there is an evidence that a particular policy is not leading to the desired results or leading to waste, it is the duty of the committee. So if a particular policy is not leading to desired results or leading to waste, it's the duty of committee to bring it to the notice of the House. Again, if you'll see, largely it's the same nature of work which this type of committee is also doing. Next is Committee on Public Undertakings. This committee exercises same financial control on the public sector undertakings as the PAC. PAC is the authority which we just discussed. Exercises over the functioning of government departments. And what's the functions of this committee? To examine reports and accounts of public undertakings. To examine reports of the CAG on public undertakings. To examine autonomy and efficiency of public undertakings, and to see whether they are being managed in accordance with sound business principles and prudent commercial practices. To exercise such other functions vested in the PAC and the Estimates Committee as are not covered above and as may be allotted by the Speaker from time to time. Okay. Now moving on to the role of CAG, which is the most important part. So I would say this is the most important part. CAG plays a key role in functioning of financial committees, etc. So let's see, what does he do? His reports generally form the basis of committees' working, although they are not precluded from examining issues not brought out in his reports. He scrutinizes the notes which the ministries submit to the committees and helps the committees to check the correctness of submission to the committees and the facts and figures in their draft reports. Number 3, financial committees present their report to the Parliament, state legislature with their observations and recommendations. Various ministries, departments are required to inform committees of the action taken by them on the recommendation of committees, and the committees present action taken reports to the Parliament. And in respect of those audit reports which could not be discussed in detail by the committees, written answers are obtained from the departments or the ministry concerned and are sometimes incorporated in the reports presented to the Parliament. Now you can see that in all of these cases, the workflow or the information flow is largely same. If we have to align this with the requirements of a company or a private company, so what will happen over there? The discussions would be held with the management. Once those are held with the management, then those will go to those charged with governance, audit committee or the protectors. Same thing is happening over there. Now in this case, who is the ultimate controlling authority? It's the government. So that's why everywhere, instead of those charged with governance, what are we referring to? Parliament. Yeah. And the departments are who are getting audited. So that's why those you can just say are similar to the case of the management. Okay. Now CAG specifies the entities that come under the audit purview of CAG at the union and state level. However, scope and extent of audit is determined by the CAG itself. So there are 3 audits which we'll discuss, and the scope and the extent in this case. Audit of PSUs not constrained to financial and compliance audit. So this is not limited to financial and compliance audit, which we'll discuss because it goes beyond that. So it's not limited to the financial statements, it's not limited to the compliances. It covers various other aspects. For example, propriety audit, for example, this comprehensive audit. So these are in addition to this, and this is something which the CAG may require, and will understand as to what does it include. So if you look at the propriety audit, it's about getting into the propriety of the project or propriety of the activities. Yeah. And in relation to this, a specified type of audit may be prescribed, on which again a detailed audit on which detailed procedures will have to be performed, on which again a separate report will have to be submitted. But this is something which is coming over and above financial and or compliance audit. Next is about the comprehensive audit. Under this audit, CAG does not really cover again the field which has already been covered. He conducts an appraisal or an efficiency cum performance audit. He sees whether the undertakings have fulfilled the objectives for which they have been established, whether value for money spent has been obtained, whether the targets have been achieved. He locates the areas of weaknesses, including the review of decisions taken by the management and a comprehensive appraisal of performance of the undertaking. Now you may be thinking that what are these different types of audits? See, these all audits you can say are in the relation of operational performance, efficiency, effectiveness, which goes beyond the financial statements. And in case of PSUs, all of these things are very, very important. Why? Because the public interest is involved and the public money is involved. And this public money is flowing in the form of funding from the government. And let's try to relate some of these concepts to what we have already covered. You remember management audit? Yeah? What was management audit? Audit of the management. And do you remember operational audit? Audit of the operations of the company. Why were those conducted? Those were not conducted because it was mandatory under any other law. No. Those were conducted so that the performance of the organization can be improved. So wherever there are any gaps, wherever there is any scope for improvement, that can be assessed and for which new policies and procedures can be designed. Yeah, so that the overall effectiveness of various activities, operations can be improved. That was the objective. Now, in case of a PSU or a government company, instead of calling them by the name of management audit or operational audit, what are the names assigned to them? Propriety audit, comprehensive audit, or supplementary audit, or the test audit. So these are now known by the different names. But if you'll understand conceptually, you will find that most of the things that we have discussed so far in case of these two types of audits are similar to management audit, operational audit. Isn't it? Yeah. And we'll discuss about these things in more detail. Next, organization's decisions to be taken by competent authority. In examining the decisions of the management, auditor examines that these were taken by the competent authority after examination of all aspects on the basis of all the relevant information available at that time and taking into consideration different alternatives available to the management. And the decisions were consistent with the overall objectives of the organization. Now, if I take a very small example for this, let's suppose a department has to purchase furniture. So what will the department do? First of all, department will assess whether this furniture is required or not, whether the existing furniture will be good enough or it requires replacement. If the furniture is required to be procured, what are the alternates available? So the quotations, so that the furniture can be procured at the best prices. So some of these aspects are what? Some of these aspects are the considerations which a department should take before spending that money. Now, in case of a PSU, because the PSU has got the fund, or in case of any government setup, because they have got the fund, so that's why all of these checks and procedures are definitely available in-house. So it will not happen that the entity will not have all of these policies and procedures. They will also have their SOPs. But in addition to that, when the audit will be conducted, all of these things are also required to be checked. Which in any case, if you remember, even under the statutory audit, even under the audit around the internal control system, we do this. Yes or no? It's just that we have just assigned a sort of technical language to such type of activities in the form of audit of government entities. That's it. Otherwise, the procedures are all same. Yeah. Helping the government. So of course, it's a help to the government. Why? Because it's the government fund which is involved, and the functioning of all of these entities is basically what? Functioning of the government. So government is not functioning independently. Government is basically functioning with the help of these organizations only. They are nothing but the government in a way. They are nothing but the government functionaries. So that's why, in a way, this is only helping the government, highlighting issues of efficient and economic operations. So if there are any those are also highlighted. Fiscal and managerial accountability. Government audit encompasses two main elements. First, fiscal accountability, which includes audit of provisions of funds, sanctions, compliances, propriety. Second, it includes audit of efficiency, economy, and effectiveness. Okay, yeah. So now moving on to the elements of PSU audits. PSU augments the confidence of intended users by providing relevant information and independent and objective assessments concerning deviations from accepted standards or principles of government good governance. So let's understand what are the basic elements involved in their audit. Three parties, first of all, which are involved. First, of course, is the auditor. Role of auditor is fulfilled by Supreme Audit Institution India and by its personnel delegated with the duty of conducted audit. So this is first party. Second is responsible party. Now who is the responsible party? The relevant responsibilities are determined by constitutional or legislative arrangement. Auditable entities and those charged with governance of the auditable entities will be the responsible parties. So that means the entity itself, correct? Or the PSU itself. Third is the intended user. Who are the intended users? Individuals, organizations for whom auditor prepares the audit report. So that means it's all about the stakeholders. What are the other elements? So we are looking at the basic elements in relation to the audit. So first is about the parties which are involved, which is like very common. Second is the subject matter, means as to what all that audit will cover, criteria, subject matter information. Second is about the type of reports, because eventually audit will have to come out with a report. Now there are two types of reports, and those two types of reports will vary depending on the type of engagement. For example, if it's an audit of financial statements, so therein the audit report will be called as audit report on attestation engagements. And in case it's a specialized type of audit, for example, something which I related to management audit or operational audit, which is also considered to be a sort of proprietary audit or proprietary audit in the context of PSU. So what do we call such types of audits as? Direct reporting engagements, for which we can have two examples: performance audits, compliance audits. Yeah. Now in case of attestation engagements, for which a type of report is given, will be the attestation report. In this case, responsible party measures the subject matter against the criteria and presents the subject matter information on which auditor gathers sufficient appropriate audit evidence. Can you see this? Auditor gathers sufficient appropriate audit evidence. Why? So that he can provide a conclusion or to reach a conclusion. Who is the responsible party here? Responsible party is the entity which will be audited. So they will be looking at the information, they will be providing the information which will be required by the auditor in the context of the audit. Let's suppose if the audit involves financial statements, then the information around the financial statements will be provided. And in this case, again, what will be the duty of the auditor? To perform audit procedures or to gather audit evidence. And the audit evidence in this case will also be meeting the same parameters. One, it should be sufficient. Second, it should be appropriate. You remember these two terms we discussed? The same terms are being used over here. Second is about non-attestation engagements, which have been termed as, please understand, these have been termed as direct reporting engagements, but don't get confused by the term. It simply says that in case of these specialized types of audits, auditor will measure or evaluate the subject matter against the criteria. Now, what does it mean, subject matter against the criteria? So let's suppose performance audit is required, wherein the performance of the organization, its effectiveness of operations, efficiency of operations are required to be checked. So what will become the subject matter? Operations. And what will be the criteria? The SOPs, the procedures, the required levels which the entity would have been required to maintain. So against those criteria, its actual performance will be evaluated by the auditor. That's it. Yeah. So that is how these two have been differentiated. Okay. So let's look at the principles of the PSU audit. Now these are largely in line with what we have discussed. So some of the general principles are what? Ethics and independence, professional judgment, quality control, audit team management, audit risk, materiality. Can you see all of these things are same? And in terms of audit process, what all steps will be involved? Planning, wherein they have included the execution. So this is about planning and execution. Conducting the audit means again execution. So planning, execution, and then comes the conclusion and reporting. And the follow-ups will be required wherever there were any matters which have been continuing as to what is the status of them, how those have been resolved for the current audit period. Okay, so this was a quick overview in relation to the audit principles. Now let's move on to the audit of government companies first of all. So now we are getting into the details. So far we have had brief discussion around some of the things which we need to understand in the context of government companies, PSUs, and the auditor, audit authorities, or the committees, etc. So now we are starting with the audit of the government company. So first of all, appointment should happen. Statutory auditors of the government companies are appointed or reappointed by the CAG. Okay, so auditor in this case is appointed by the CAG. In case of government companies, though the appointment of statutory auditor is done by the CAG, remuneration is left to individual companies to decide based on certain guidelines which will again be given by the CAG. CAG may direct the appointed auditor on the manner in which the accounts are required to be audited, and the auditor so appointed has to submit audit report to the CAG. So this is the first step. So CAG is directing the appointed auditor. The report, among other things, of this statutory auditor includes the directions, if any, which will be issued by CAG. So let's suppose CAG has appointed the statutory auditor. So statutory auditor will by default audit the financial statements as per the requirements of accounting standards, or in line with the requirements of accounting standards, following standards of auditing. So they remain same. Let's suppose in addition to this audit of financial statements, CAG also gives some more directions, or some specific directions were given to the auditor to be ensured when the audit is conducted. So when the auditor will submit the report, among other things, his comments on those specific directions of the CAG are also required to be incorporated. Okay. The report, among other things, includes the directions, action taken, and its impact on the accounts and financial statements. Okay. Next is supplementary audit. What is the supplementary audit? If you remember, we discussed that CAG may require, in addition to this audit, a supplementary audit to be conducted. The CAG shall, within 60 days from the date of receipt of audit report, have a right to conduct. CAG will have right to conduct supplementary audit of financial statements by such person or persons as he may authorize in this behalf, and for the purposes of such audit require information or additional information to be furnished to any person or persons by such person or persons and in such form as the CAG may direct. You can say some of the supplementary procedures, if CAG believes, are required to be performed in relation to financial statements of a government company, then CAG may appoint another person and may require those additional procedures to be performed by that person. Okay. Comment upon or supplement such audit report. Any comments. Now, when the CAG will receive these reports, so CAG is required to provide its comment on that. Any comments given by CAG upon or in supplement to the audit report issued by the statutory auditors shall be sent by the company to every person. So comments given by CAG and audit report issued by statutory auditor shall be sent to every person entitled to copies of audited financial statements. Every member of the company, every trustee for the debenture holder, and to all other persons other than such member or trustee, being the person so entitled, and also will be placed before the AGM of the company. Next is about test audit. So we have discussed about statutory audit first of all to start with. Then in addition to that, we understood that CAG may require supplementary audit to be performed. Okay. And for all of these, there could be certain comments from the CAG. Then comes the test audit. CAG may, in case of any company means companies which we have been discussing in relation to all the companies which will get covered under the purview of government companies. If the CAG considers necessary, cause test audit to be conducted of the accounts of such company, in which case provisions of this section 19A of a special act. What is this special act or a different act? CAG's Duties, Powers and Conditions of Services Act 1971 shall apply to the report of such test audit. This is a third one which the CAG may require if it considers necessary. Okay, yeah. So in the flow chart we had this summary of whatever we had discussed. Yeah. Now quickly on to this financial audit. Now what is financial audit? It is performed to express opinion on the financial statements. This will require opinion on the financial statements and enhance the degree of confidence of intended users in the financial statements. Automatically, once the financial statements will be audited, automatically the reliance which can be placed on the financial statements will be improved. CAG shall express an opinion whether the financial statements are prepared in accordance with applicable framework which is related to financial reporting. In case of financial statements prepared in accordance with fair presentation financial reporting framework, whether the financial statements are presented fairly and they give a true and fair view. So it's all about giving an opinion on the financial statements as regards their truth and fairness. So that is about financial audit. Other than that, there is another audit which is called as compliance audit. Let's try to understand about it. Now, what is this? Because this is something different. This is not about audit of the financial statements. So let's understand this. It's an independent assessment of whether a given subject matter is in compliance with applicable authorities identified as criteria. It is carried out by assessing whether activities, financial transactions, information comply in all material respects with the regulatory and authorities which govern the audited entity. It may be concerned with regularity, that means adherence of the subject matter to formal criteria, which may be emanating from relevant laws, regulations, and agreements applicable to the entity. Propriety, observance of the general principles governing sound financial management and ethical conduct of public officials. While regularity is emphasized in compliance auditing, propriety is equally pertinent in the public sector context, in which there are certain expectations concerning financial management and conduct of officials. So both these aspects are important, regularity as well as propriety. We can say this audit is part of combined audit that may also include other aspects. It's generally conducted either in relation with audit of financial statements or separately as individual compliance audits or in combination with performance auditing. Generally, you will understand its relevance in the context of performance audit. So let's understand what is this performance audit. Performance audit is an objective and systematic examination of evidence for the purposes of providing an independent assessment of performance of government organization. What's the purpose? Independent assessment of the performance of government organization, program, activity, function, in order to provide information to improve public accountability, facilitate decision making by parties with responsibility to oversee or initiate corrective action. It's conducted again by CAG through various subordinate offices of Indian Audit and Accounts Department. This audit promotes accountability by assisting those charged with governance and oversight responsibilities to improve performance through an examination of whether. What is examined? Decisions by the legislature or the executive are efficiently and effectively prepared and implemented, and taxpayers of or the citizens have received full value for the money. Now, in relation to various activities of an organization, what is getting checked? First of all, whether the decisions are being implemented the way those are required to be done. So there will be some criteria, and the criteria will generally be requiring the assessment to be done carefully. Say for example, a particular expenditure has to be incurred. So whether that expenditure is really required or not. And if that expenditure is required, so should that be the amount which is currently being discussed, or can it be cut down? And if that expenditure is incurred, how will the public be benefited because of that expenditure? So all of these aspects are very, very critically required to be assessed by any sort of government organization, because it's the public money which is involved. Yeah. So that's why some of these types of audits that we have been discussing now are requiring the audit of the performance of an organization. Okay. Yeah. According to the guidelines issued by the CAG, performance audits usually address the issues of economy. Now, what do we mean by economy? Minimizing cost of resources, having regard to appropriate quantity, quality, and the best price. Means if there are any ways for cost cutting in relation to a project, whether that was done or not, to ensure that there are economies in terms of various activities which are carried out. And at the same time, quality should also be maintained. Next is about efficiency. Efficiency, we can say, is in relation to input-output ratio. This is all about ensuring a correct mix or correct ratio of input and output. This efficiency will be achieved when with the given input, output can be maximized. For example, let's suppose with input of 10, output achieved is expected to be 10. So is there any way that this input can be cut down and the output still remains same with the same quality? Or is there any way that with the 10 input, output can be increased from say 10 to 12 or 15 or 20? And therein again, the quality is not compromised. This is called as efficiency. Efficiency in terms of the activities, efficiency in terms of the operations. Now, this is another aspect in relation to various activities which any organization would be doing. And they would also be taking care of these things. But an audit of this will help the stakeholders or will help the relevant authorities to check whether these were taken care of by the relevant organization or not. So this auditing efficiency, so audit of efficiency will embrace some of the aspects such as whether sound procurement practices are followed, whether resources are properly protected and maintained, whether human, financial and other resources are efficiently used, whether optimum amount of resources, staff, equipment, facilities are used in producing or delivering the appropriate quantity, quality, whether public sector programs, entities, activities are efficiently managed, regulated, organized, executed, whether efficient operating procedures are used, and whether the objectives of public sector programs are met in a cost-effective manner. Now, cost effectiveness is something that we have already covered in terms of having economies, in terms of keeping the activities or executing the projects in a very economical manner. Over and above, efficiency is the next thing which is required to be ensured. And third is about the effectiveness. So what is effectiveness? It's the extent to which objectives are achieved and the relationship between intended impact and actual impact. means how effective was the outcome or how effective was the activity which resulted in the outcome. So let's see, by auditing this effectiveness, what is it that the performance audit may do? So the performance audit may assess whether the objectives of and the means provided, like legal, finance, for a new or ongoing public sector program are proper, consistent, relevant to the new policy. May determine the extent to which program achieves desired level of program results. May assess and establish with evidence whether the observed direct or indirect social and economic impacts of a policy are due to the policy or to other causes. May identify factors inhibiting satisfactory performance or goal fulfillment. May assess effectiveness of the program or individual program components. May determine whether the management has considered alternatives for carrying out program that might yield desired results more effectively or at a lower cost. Means, let's suppose a program or an activity was required to be conducted. So was there any way to conduct that activity or to perform that activity at a lower cost? Yeah, or was there any way through which this activity could have been conducted and that would have become more effective as compared to what was really planned? So looking at the various options available so that more and more effectiveness can be ascertained. Yeah. Now moving further on to the provisions around the Companies Act and this act about CAG's duties, powers and conditions of service. Now, according to this act, duties and powers of CAG in relation to audit of accounts of government companies shall be performed and exercised by him in accordance with provisions of Companies Act. Shall be performed, exercised by him in accordance with Companies Act. And let's move on to the Companies Act. Now, Companies Act empowers CAG to conduct supplementary audit, test audit of the government companies if required. If required, and this is something we have already discussed, so that's why I'm not getting into details of this once again. Okay, yeah. Now moving on to the objectives of performance audit. Objectives of performance audit are evaluation of economy, efficiency, effectiveness. Correct? So let's take one example quickly on this. Performance audit of enforcement mechanism. Performance audit of enforcement mechanism for administering the provision of Minimum Wages Act. The auditors who undertake performance audit of a program or unit must possess knowledge of the industries. That's very important because the auditor will not know the required provisions, will not understand the subject matter, will not understand the criteria against which the subject matter is required to be assessed, then the auditor cannot design his audit procedures, cannot perform his audit in an effective manner. Auditors shall have to evaluate the evidence available as to nature of returns prescribed and obtained for taking appropriate action. The performance auditor shall also have to evaluate economy, efficiency, effectiveness in the welfare systems. He can study shortcomings in the coordination. between different agencies like Labor Department, PF, ESI, and the control systems and point out a set of relevant provisions. Auditors shall also have to point out lacuna, if there is any, in the existing legal framework or the enforcement mechanism to strengthen the objective of legislation. Okay. Performance audit can not only examine the reasons for any vagaries but also ensure that the legislation serves the intended purpose. By reporting the same to the legislature, corrective is made possible if required, or you can say wherever required. Now, planning for performance audit. So what all things will be required for this performance audit? First of all, understanding the entity. Now, this is something which is very, very important, because if you don't understand the entity, if you don't understand the program, can the audit be really performed? No. So the first step will be what? To understand the entity, to understand the organization, to understand their objectives, and to understand as to why this program is required and what are the details of this program. So basically, we are now looking at the subject matter when we call this to be a program. Defining the objectives and scope of audit. Now, before we get on to the audit, it's very important to understand why the objective, why the audit is required. And we understand the audit is required to audit the performance, which will require appraisal or this assessment of economy, effectiveness, efficiency. Correct? So this will also be talking about the scope specifically in relation to the activities which are required to be tested. Then comes the next point, that is about determining the audit criteria. Now, what is going to be the criteria? Criteria will be specified in the scoping itself, because management may have laid out, or you can say the authorities must have laid out a criteria which the entity should have fulfilled. So let's suppose criteria required that a dam is required to be constructed with a particular expenditure and which will achieve a certain objective. Now, what is going to be the criteria? All of those laid out procedures in respect of this construction will become the criteria which the auditor will have to evaluate it, because this is not something which is coming from any statute, or there is no statutory requirement which is common for this type of project. So this will vary from project to project. And on the basis of all of these things, auditor will develop his audit approach. He will be designing his audit strategy. He will be basically planning the audit. So overall plan around strategy, around procedures, around as to what all things are required to be checked, what all things are required to be discussed. All of these things will be planned by the auditor in this context. Yeah. Then the auditor will also require to assess audit team skills and whether any outside expert will be required. So it's about choosing the right team. And when the team will be picked up, so the team may not be limited to the team which is available with the auditor in-house. Team which is available with the auditor in-house. He may want to involve experts. And this is similar to what we have discussed in case of statutory audits also. That wherever required, wherever the competence of the auditor will not be adequate to execute this audit, then he may consider involving the experts, and that expert will be assisting the auditor as part of the audit team only. Correct? Yeah. Then he will be establishing the timetable, the resources, he will be preparing the audit design matrix, and he will also be intimating his audit program to the audit entities. so that he can then get started with all of these activities in relation to the audit. Okay. So moving further on to the next type of audit, and that is comprehensive audit. Though we have briefly touched upon some aspects of this comprehensive audit, we will now get into discussion around some more points as around the comprehensive audit. Areas covered in case of comprehensive audit vary from enterprise to enterprise, its objective, its operations. However, in general, covered areas are those of investment decisions, project formulation, organizational effectiveness, capacity utilization, management of equipment, plant and machinery. So these are some of the commonly covered areas which we can see in case of comprehensive audit. So let's see some of the issues which are examined in comprehensive audit. So I have this query from Ambika, which she's asking whether engagement letter will include what type of audit is to be performed, or it is implied with the statutory auditor. No. See, the engagement letter, even in case of statutory audit, will require complete detail around the scoping, around the various provisions of the Companies Act in detail. So when you say that something additional is required to be conducted by him, of course that has to be clearly brought out in the engagement letter, and this is something which is normally done. You can just take one very simple example. Let's suppose statutory auditor also audits the tax, is also the tax auditor. So in the engagement letter, he will specify both the things, statutory audit as well as tax audit. He will not be saying that with the statutory audit, I will be covering the tax audit. So that's why tax audit is like more of done. So he'll not specify everything. He'll bring out, even if he's doing certification, he will bring out that in his engagement letter. Okay. So let's see some of the issues which are examined in case of comprehensive audit. How does the overall capital cost of the project compare with the approved planned costs? Were there any substantial increases? And if so, what are these? Whether there is evidence of extravagance or unnecessary expenditure. Have the accepted production or operational outputs been achieved? Means the normal levels should have been maintained. Has there been underutilization of installed capacity or shortfall in performance? And if so, what has caused it? So even if this has happened, so was it beyond the control, or was it because of some, say, abnormal activities or some abnormal reasons, or is it like in the normal course this was required to be assessed? Has the planned rate of return been achieved? Are the systems of the project formulation and execution sound? Are there inadequacies? What has been the effect on the gestation period and the capital cost? Are the cost control measures adequate? And are there inefficiencies, wastages in raw materials, consumptions, etc.? Are the purchase policies adequate, or they have led to piling up of inventory resulting in redundancy in stores and spares? Yeah. So you can say all of these issues are moving towards what? Instead of getting into each and every point, you can just simply understand that there must be an SOP with the organization. Or even if there is not an SOP, there are certain established practices. There are certain established acceptance levels, or you can say something which is required to be done in the normal course. So if there are few things which are not in line with those normally acceptable levels, that is what the auditor will have to focus on. So if the project involves certain expenditure, the outcome of which should have led to, let's suppose, efficiencies in the operations. Say the operations were expected to be more efficient by installation of a particular process or by installation of a particular machinery. Say this expectation was 10%, for which detailed study was done. So has that performance level been achieved now? Has that really improved by 10% or not? Because it should not happen that even with that installation now, the performance levels are same. Otherwise, what do we say? Otherwise, we'll have to say that this entire installation or this entire change setup which has been done has become useless. That has been a wastage of money. Yes or no? So that's why all of these aspects are required to be assessed by the auditor. Okay? The Bureau of Public Enterprises has issued guidelines to be followed by PSCs, public sector undertakings, in respect of general management, financial management, material management, and etc. Another source of criteria is industrial engineering. Issued guidelines to be followed in respect of general management, financial management, material management, etc. Another source of criteria is industrial engineering, other technical studies by internal and external experts, and the standards given in these. Then there are standards of financial propriety. Okay. Now we'll move on to another type of audit, and which is something very, very important in the context of PSUs, that is called as propriety audit. Okay, yeah, so first of all, we need to understand about the propriety audit. Then I think Supriya has a query in between. Supriya is asking, so do the auditor need the auditor expert here to access the valuation? Do the auditor need the auditor expert here to access the valuation? So if required, he may involve. But I'm not sure which valuation you are referring to over here. I'm just answering this in a general way, that if at all auditor will require, and if let's suppose the management will have an expert, and wherein the auditor also believes that auditor will require his own expert in relation to that audit, maybe for any reason which you may be considering, then there is no problem absolutely in engaging the expert by the auditor. Okay, now let's understand about this propriety audit. Audit as a composite concept looks into accounting and arithmetical accuracy, adherence to applicable rules and regulations, propriety, and truth and fairness of the end results. All the requirements of the Companies Act are also applicable to government company. The analysis that follows, that some of the provisions of Companies Act really are propriety based. So there are certain provisions of CARO which also seem to be propriety based. Propriety audit stands for verification of transactions on the tests of public interest, commonly accepted customs, standards of conduct. Now we can just understand the meaning of propriety by reading this term. Propriety is defined as something which meets the tests of public interest, commonly accepted customs, standards of conduct, and particularly as applied to professional performance, requirements of law, government regulations, and professional codes. Basically, it comes down to economy, efficiency, and the faithfulness. It emphasizes more on the substance of transactions and looks into the appropriateness thereof. Let's take an example to understand what do we mean by propriety audit. So let's suppose a building has been constructed by a PSU. Okay. And let's suppose approximately rupees 5 crore has been spent on the construction of that building. Auditor has verified, auditor has examined this entire expenditure. So I'm not saying he has verified each and every voucher, each and every bill, but auditor is satisfied that on the construction of such type of building, rupees 5 crore was reasonable. Okay. So that means excessive expenditure on the construction of building was not done. So it was the reasonable expenditure within which building got constructed. Absolutely fine. Quotations were taken before the construction. So that's why again we can say the expenditure was reasonable. But this building has not been used by this entity for the last 3 years. So initially there was a plan. Initially there was a plan to use this building for a specified purpose. And the plan was to use the building, of course, immediately after it is constructed. Otherwise, no building will be constructed. So nobody will construct a building to keep it idle. Isn't it? So what has been observed is that the expenditure on the building was verified. So if we look at the audit of the financial statements, or if you look at the financial audit, one will be able to capture, one will be able to verify whether the expenditure was as per the documents, as per the reasonable limits or not, which is also fine in this case. But this expenditure could have been avoided. This expenditure was not really required. Because if there was no need of constructing a building, unnecessarily rupees 5 crore have been spent on this. This aspect of assessing whether the expenditure was really required or not, and not to check or not to limit our checking to whether the expenditure is as per the original bills etc. or not, is called as propriety aspect. So in case of propriety audit, what is the objective? Objective is to understand the requirement. Objective is to really assess the requirement and to avoid any sort of this unnecessary expenditure or this wastage of money. Why? Because again, all of this money belongs to public, because it's all about public utility departments or the public interest entities. Okay. So some of the aspects which you see in case of propriety audit, let's understand that the expenditure is not prima facie more than the occasion demands. That the expenditure is not prima facie more than the occasion demands, and that every official exercises same degree of vigilance in respect of expenditure as a person of ordinary prudence would exercise in respect of his own money. Because let's suppose there's an official of the PSU, of the government department. He incurred this expenditure of rupees 5 crore on a building. Let's suppose if he was required to spend this money for his own building, or out of his own money Would he really have spent that money? That should be the perspective. So the person should put himself into the shoes of that entity at an individual level or at a personal level, and then should check whether this money is really required to be spent or not. That the authority exercises its power of sanctioning expenditure to pass an order which will not directly or indirectly accrue to its own advantage, because again it should not be for personal benefit or for the advantage of its own. That the funds are not utilized for the benefit of a particular person or a group of persons. Okay? And that apart from the agreed remuneration or reward, no other avenue is kept open to indirectly benefit the management personnel, employees and others. So it's the responsibility of executive departments to enforce economy in public expenditure. The function of audit is what? Audit can only bring it to the notice of the proper authorities about the wastefulness in public administration and cases of improper, avoidable, infructuous expenditure. Okay, so that's the outcome which the auditor can provide. Now, as we have discussed that there are certain provisions in the Companies Act which also cover various aspects of propriety audit. So now we can get on to some of those provisions. The requirements of provisions of section 143(1) is essentially propriety oriented, as much as some specific dubious practices are required to be looked in by the auditor. Areas of propriety audit covered under section 143(1) could be the following. So let's understand whether the terms on which secured loans and secured advances have been made are prejudicial to the interests of the company or its members. Now this is something which we cover in case of this section at the time of audit. Now what does it require? That the terms of loan include such matters as security, interest, repayment period and other business considerations. The auditor needs to inquire whether the whether the terms are such that they can be adjudged as prejudicial to the legitimate interest of the company or of its shareholders. This is a process of judging a situation by reference to certain objective standards or reasonableness, whether the terms entered into are prejudicial or not only to the company but also to the shareholders. Now this again can be clearly related to the propriety aspect. Moving on to the next one. Whether the transactions of the company which are represented merely by the book entries are prejudicial to the interests of the company. Now this proposition has got to be inquired into by reference to the effect of book entries which are not supported by the transactions on the legitimate interests of the company. Auditor has to exercise his judgment based on certain objective standards. It is also possible that some transactions may not adversely affect the interests of the company. The auditor has to judiciously consider what does and does not constitute the interest of the company. Number 3, whether investments of companies other than a banking or an investment company in the form of shares, debentures, other securities have been sold at a price lower than the cost. So if there is any such matter wherein some of these investments of a company have been sold at a price lower than the cost, so will that be beneficial to the company? Not at all. So will that be beneficial to the shareholder? Again, not at all. So this is a matter of verification by the auditor. The intention, however, is not known whether the loss has occurred due to the sale. The inquire into circumstances of sale of investments that resulted in loss. So one is there is a loss. So if you look at the documents, if you look at the sale agreement, loss can be verified. But objective is not to check the loan agreement. Objective is not to ensure that the cost price or the computations are done correctly and to really check whether the loss has been computed correctly or not. No. Intent is to check as to whether this should have really resulted in a loss or not. Whether this loss is something which is originally, which can be originally seen, means ideally, let's suppose there should not have been a loss, but the way the agreement was structured, it resulted in a loss. So this aspect is something which is required to be analyzed by the auditor in this case. The duty cast on the auditor, therefore, is that of propriety audit. That is, reasonableness of the decision to sell at a loss. Whether that was reasonable. So there could also have been a situation wherein the entity could have kept the investments for some more time and then sell them. So what was the urgency to sell them at a loss? Or maybe if these were required to be sold, then only 15 days back these could have been sold at a profit. So why those were not sold at a profit? It involves exercise of judgment having regard to the circumstances in which company was placed at the time of making the sale. Next, whether loans and advances made by the company have been shown as deposits. So company has given loans, advances, and those have been shown as deposits. Again, considering the propriety element, rationalizing the proper disclosure of such loans, advances given by the company. Next, whether personal expenses have been charged to revenue. Revenue means to the statement of profit and loss. So any business should not accept any expenses which are personal in nature. So let's suppose if there is a company, so company is a separate legal entity. And let's suppose there is an owner of the company who has got 100% stake in the company. So he owns the company. So even if he owns the company, he's not the company itself. He's different from the company. He may think that all of the profits of the company belong to him. So that's why company is not different from him, and that's why all of his expenditure are nothing but the expenditure of the company. But will that be the right perspective? Answer is no. Company is separate. So that's why if any expenditure is required, that should be in relation to the business of the company. That should be in relation to the operations of the company. So if the owner or if that individual spends, let's suppose, an X amount and that is charged to the company or that is charged to the company's P&L, so will that be right? The answer is no. That will not be appropriate. Similarly, in case of other companies wherein multiple stakeholders may be involved, wherein the public may also have stake, therein some of the shareholders, let's suppose who are controlling the company, or the directors who have been managing this company in terms of its various activities. So will it be appropriate to charge the personal expenses of all of these personnel? The answer is no, because their personal expenses are not the one which have been incurred in relation to the business of the company. So this is again a propriety aspect which has to be assessed by the auditor. Okay, yeah. And how will the auditor check it? Again, for this verification, he can check the vouchers, he can check the invoices, etc. But what is the objective? Is the objective only limited to checking the expenses? No. objective is also to check whether any such expenditure which appeared to be in the nature of personal expense of any of these officials or the personnel has been charged to the company's account or not, which could be about using the assets of the company for personal use. So maybe company has got vehicles and which should have been used for business purposes, but all of those vehicles are being used by the directors of the company for their personal use. So will that be acceptable? No, that should not be acceptable, because all of these expenditures which are being incurred are impacting the profitability, financial performance of the company. So if that expenditure was required to be incurred for the personal benefits of the directors, either that should form part of emoluments of the directors, so that this is something which can be considered to be a part of business expense or the expense of the company, or otherwise this should not really have been incurred, or this should be incurred in the personal account of the directors. So this is one of the aspects which the auditor will require to check, wherein he will not be limited to the documents, or even if he look at the documents, this may not appear or he may not be able to capture the propriety element, whether that has been incurred for the company or not. So he'll have to go beyond that. Next, in case it is stated in the books and the papers of the company that shares have been allotted for cash, whether cash has actually been received in respect of such allotment, and if no cash is actually received, whether the position in the books of accounts and the balance sheet so stated is correct, regular, and not misleading. A control has been set up to verify receipt of cash in case of allotment of shares for cash. Further, if the cash is not received, the books of accounts and the statement of affairs show the true picture. Cost records and the provisions of cost audit are designed to inculcate cost consciousness in the management and to know whether productivity is of acceptable order and whether undue wastage or loss has incurred. So this is something which is required to be assessed. It would be useful to go into some of the specific requirement of cost audit report in this context. Some of the matters in the additional information sought through the statement of P&L provide a basis for making more searching inquiries into some vital matters like consumption of raw material under broad heads, goods purchased under broad heads, WIP under broad heads, any item of income of expenditure which exceeds 1% of revenue from operations. Why has that limit been put? So that if there is any expenditure which is crossing a certain threshold, can really be captured, can really be identified, can be assessed if required. Okay, yeah. So we can just clearly see that propriety audit, even though is specifically required in case of PSUs or appears to be a peculiarity in case of a PSU, but there are a lot of provisions which are that of propriety audit only, which also exist under this section 143(1) and which are also therefore applied in case of private companies. Yes or no? So in a way, what are we saying? In a way, we are saying that this audit or this propriety audit is not completely relevant for the PSUs. Some of their provisions are also being applied in case of private sector companies also. Yeah. Then we can move on to this next aspect around the propriety elements which exist under CARO, and therefore they will also become applicable to non-PSUs also. Yes or no? So what we can do is we can now take a break of 10 minutes. After the break, we'll continue with our discussion on the propriety elements under CARO and we'll move further on this chapter. Hi, welcome back. So we can now continue with our discussion. So moving on to the proprietary elements which are being covered under CARO. So first one, if the company has granted any loans, secured or unsecured, to companies, firms, limited liability partnerships or other parties which are covered under section 189 of the Companies Act. In such a case, whether the terms and conditions of the grant of such loans are not prejudicial to the company's interest, whether the repayment of the principal amount and the interest are stipulated, and whether the repayments or receipts are regular. For this, the auditor should take note of repayment schedule. If the loan agreements are not executed, any other equivalent documents may be referred to in respect of all of these documentation which the auditor will be required to check. The dates of receipts of principal amount and interest thereof needs to be verified with reference to the books of accounts. So this is all about the procedures which the auditor can perform in relation to checking the underlying documents. But what is the objective? If you look at the objective again, the objective is that whether any such type of loans, etc., which have been given were prejudicial to the interests of the company or not, for which auditor needs to understand the reason of getting into this type of arrangement. He needs to understand the objective as to why all of these transactions have really happened. Next, if the amount is overdue, state the total amount overdue for more than 90 days and whether reasonable steps have been taken by the company for recovery of this amount, including principal and interest. In making this examination, auditor would have to consider facts and circumstances of each case, including the amounts involved. It is not necessary that the steps to be taken must necessarily be legal steps. No. So there could be various other steps or various other things which the management might have planned in respect of this. Depending upon the circumstances, period of delay and some other similar factors, issues of reminders or sending of advocates or solicitors notice may amount to reasonable steps. The auditor should ask the management to give in writing the steps which the management would have taken. The auditor should arrive at his opinion only after consideration of management's representations. Now here again, even if we talk about all of these provisions, all of these procedures, what is it that we are really looking at? The objective is about the overdue amount. Because in case the amount has become overdue, then is it really beneficial for the company? No. So the due period has been ascertained looking at the operations, looking at the working capital, looking at as to how the fund flow or the cash flow should have been maintained. But if that is not happening, then this is again not beneficial for the company. Moving on to the next point, that is about loans, investments, guarantees. Whether in these cases provisions of section 185, 186 have been complied with. If not, provide the details. Now in relation to this, Companies Act prescribes certain criteria. Again, why? Again, to ensure the interests of the company. In case those interests of the companies have not been ensured, so the auditor will definitely look at the documentation, but auditor needs to also get into the rationale of this transaction. Cost record is something that we have just talked about in the form of the cost audit. Now, even in the CARO, we have this provision of ensuring that the company is maintaining the cost records. It's not about the cost audit now, but it's about the cost records, because if the company is maintaining the cost records, then they will be able to analyze their costing. They will be able to analyze their costs in finer detail or in minute details to ensure that wherever there are excessive costs in relation to any of their processes, any of their production activities, the same can be controlled, or wherever required, improvements can be brought out. But all of these things are possible only in case when the management will be looking into these activities. So that's why this mandate on the part of the auditor has been done to ensure that auditor ensures that the management has been doing this or not, because only then it will become beneficial for the company. Okay. Next, whether the company is regular in depositing undisputed statutory dues, including PF, ESI, income tax, GST, etc., to the appropriate authorities, and if not, extent of the arrears of outstanding statutory dues as on the last day of the financial year concerned for a period of more than 6 months from the date they became payable. In addition, where such statutory dues have not been deposited on account of any dispute, then the amounts involved and the forum where they are pending are required to be disclosed. Okay. Now in this case, the companies are first of all required to ensure that the statutory dues are paid on time. And if there are delays, the delays should not be crossing a significant period of time. For example, this provision requires delays in excess of 6 months to be reported. But even if we reach up to a period of 3 months, 4 months, 5 months, is that a reasonable delay? No. Because in case there are such delays and the company is regularly in making those delays, then there is an implication of interest penalties on the company, which should have been avoided by the company. Yeah. So these are very, very important aspects which need to be analyzed by the company. And that's why a separate reporting in respect of all of these excessive delays are required to be done. Other than this, at times, a company may get into a dispute in respect of a statutory due. And because of that dispute, again, the money may not have been deposited, or if the money has been deposited, it may not be the full amount, which may again lead to some of the interest implications, some of the penalty implications for the company at a later point of time. And are all of these things beneficial for the company? Not at all. So that's why again the requirement says that all of such cases should be assessed by the auditor and should be reported by the auditor in his report. Okay, that is Karo. Next, if the company has defaulted in repayment of loans, borrowing, or any sort of such type of borrowings, then period and amount of default should be reported. And in case of default to banks or any such institution, lender-wise details are required to be provided. Now in this case, again, if we look at the requirements, a schedule can be given by the company which can then be altered by the auditor. On the basis of that schedule, auditor can also check what has been the delay, who has been the lender, what were the terms because of the delay, what all interest penalties are required to be paid, whether those have been paid or not. Those may have been subsequently paid by the management or the company, which may not have any financial implication as far as audit of financial statements is concerned, or which may involve any reporting implication in terms of not issuing a clean opinion or a clear opinion. But are all of these things like default in the repayment beneficial to the company? No. These are not at all beneficial for the company, because the financial penalties which are imposed or the excessive interest which are required to be paid, those are not really beneficial for the overall financial performance of the company, for overall financial position of the company. So this is another aspect which is required to be considered by the auditor. But auditor is not here required to just undo all of these transactions. He can then report, and if he'll report, then the stakeholders would get to know about it, that all of such events or transactions or all of such things have happened in case of a company, which have been brought to the notice of the stakeholders. Okay. Next, whether the term loans were applied for the purpose for which loans were obtained. Now, term loans are obtained for a specified project for a long-term period, and let's suppose the purpose for which the terms loan were obtained, instead of applying that money for that purpose, those get applied for some other purpose. That may not really be beneficial, or that may not really be as per the terms of the contract, and which the lenders may want to know, and the interest of the lenders will get protected when such of these things will be taken care of by the company. But the company is not taking care of such type of things. So that's why what is it that the auditor is required to do? Again, report any of such matters. Whether the money is raised by way of IPO or further public offer, including debt instruments, and the term loans were applied for the purposes for which they were raised. Again, it's a similar sort of thing. Yeah. So this is again required to be assessed by the auditor. Next, and a very important clause which the CARO covers, whether any fraud by the company or any fraud on the company by its officers, its employees, has been noticed or reported during the year. Now it covers two types of frauds. Maybe the company has done some fraudulent activity. Yeah. So that is again not good. So that is something which is not acceptable. Or maybe some fraud has been employees by its officers. Both the things are again not the acceptable things to be done in the context of a company. So that's why all of these things are required to be reported by the auditor. Because now when he'll be reporting all of these matters, he'll also be getting into the details of these matters. And he needs to understand as to why all of these things would have taken place. And when these are also brought to the notice of the stakeholders, so they will also be able to understand, they will also be able to take the decisions after getting to know about all of these things which have been happening in the company. Next, whether the managerial remuneration has been paid or provided in accordance with requisite approvals as per the requirements of the Companies Act. Now the managerial remuneration has to be as per the approved limits or as per the limits which are prescribed in the Companies Act. So if the payouts have been more and the company has not been taking the necessary approvals, then this is not beneficial again for the company. It is not beneficial again for the stakeholders who have invested in the company. And that's why it becomes very, very important for the auditor to look into these aspects and report any of such matters in the report. Next, whether the Nidhi company, this is something that we discussed, you remember, whether the Nidhi company has complied with net on funds ratio in the context of deposits. Why? Because to maintain its liquidity, to maintain its position wherein it will be able to meet out its liabilities, it needs to have certain proportion so that the company has covered its risk at a certain level. And this is also something coming from the requirements of the law. So the regulatory authorities have also taken a due care in terms of assessing these limits. At least those levels should have been maintained by the company. This specified type of this specified type of NBFC And by bringing in all of these points in the audit report, again, the stakeholders will be aware of any of these type of situation. Whether the company has made any preferential allotment or private placement of shares or fully or partly convertible debentures during the year under review, and if so, as to whether the requirements of Companies Act have been complied with and amounts raised have been used for the purposes for which funds were raised. Again, in this case, what are we saying? Whether the monies obtained are used for the purposes for which they were obtained or not. Next, whether entered into any non-cash transactions with the directors or persons connected with him, and if so, whether that has been done as per the requirements of the Companies Act or not. Now, some of these non-cash transactions which the company might have done or made with the directors may not really get reflected in the books of accounts at times, because some of these non-cash transactions could be in-kind benefits which may have been provided, or some of the other transactions which might have taken place. Now it becomes the duty of the auditor to get into those matters, to get into those transactions, to analyze them, and also to assess that even if those transactions are taking place, are those really in line with the requirements of the Companies Act or not? So if those are in line with the requirements of Companies Act, it's fine. If those are not in line with the requirements of the Companies Act, then there could be a problem. Then there could be a problem as far as interests of the stakeholders is concerned. Okay. Now, what we can see is that Companies Act, and which is not limited to PSU, covers so many aspects of proprietary audit. Yes or no? Yeah. So that's why we are saying that proprietary audit in a way is not really limited to a PSU. But yes, PSU is focusing on this more. PSU has covered this as a special type of audit, which is also completely conducted in a very different manner with a specified objective, with a specified set of procedures. But many aspects of these proprietary audit are also seen in case of audit of non-PSUs as well. Okay. Now moving on to the audit report. So let's move on to the audit report of the CAG. The reports of CAG are presented to the Parliament. Reports of CAG are presented to the Parliament in several parts, which consist of the following. Introduction containing a general review of working results of government companies, deemed government companies, and the corporations. Results of comprehensive appraisals of selected undertakings conducted by the audit board. Resume of the company's auditors' reports submitted by them under the directions issued by CAG, and that of the comments on the accounts of government companies, and significant results of the audit of undertakings not taken up for appraisal by the audit board. For certain specified states, CAG submits a separate audit report, commercial, to the legislature, while for other states or union territories with legislature, there is a commercial chapter in the main audit report. The state audit reports contain both results of audit appraisal of performance of selected companies or corporations, as well as important individual instances of financial irregularities, wasteful expenditure, system deficiencies, if any noticed by the statutory auditors, comments noticed in government audit in the audit functions of certification of accounts, and a general review of working results of government companies and corporations. So you can now see that all of these reports are eventually required to be reviewed by the government, or we can say the parliament. But this entire activity is being conducted through CAG. CAG is also taking care of each and every provision in respect of this audit, and then passing on the final reports, which are then reviewed by the parliament, which are then discussed and assessed by the parliament, or we can say the government. And we can see that all of these aspects are not limited to the audit of financial statements. They are going beyond financial statements. And all of these aspects which are going beyond the financial statements are also reported to the parliament for their review, for their assessment, for their consideration, so that accordingly the new set of policies, new set of procedures, new set of schemes can be implemented and the improvements can be brought out. Okay, yeah. So with this, we can conclude our discussion on the PSUs, on the audit related to PSUs, and on certain specific aspects related to PSU, wherein we understood that PSU are largely involved in the public interest. So that's why the focus in case of PSU is not limited to financial statements. It goes beyond the financial statements. Yeah. So now we can move on to the next chapter. Moving on to the next topic, that is about liabilities of auditor. Now, auditor carries various liabilities, various responsibilities. Yeah. And I'm not talking about the responsibilities in respect of audit procedures which are required to be performed by the auditor. We are just talking about the responsibility of the auditor, or the main responsibility of the auditor. And that is what? To ensure that the confidence of the stakeholder is maintained. The stakeholders are able to place their reliance on the financial statements of the company. They are able to take their decisions, or they take their decisions in respect of the company, whether it is about investments in the company or any other activity related to the company, considering the fact that the financial statements are audited by the auditor after taking due and reasonable care. Means they have applied their professional judgment, they have applied their professional experience, professional knowledge, everything. But while doing this, due and reasonable care was taken. They were not negligent. So that is what is the expectation of the investor, that is what is the expectation of the stakeholder, that the auditors were never negligent in terms of any of their responsibilities, in terms of any of their audit procedures. Because if the auditors will not take due care, if the auditors will become negligent in respect of any matter, then this may have a severe impact in relation to the company, and which may not come to the notice of the stakeholder for some period of time. Because in any case, if there is any problem in the company, then it will be brought to the notice of the stakeholder at some point of time. Let's suppose if there is a fraud in the company. Yeah, let's suppose if there is a fraud in the company which has been going on for last 3 years. Now, to say that this fraud will never be discovered, it's not true. Sometime or later, fraud gets discovered, and which may be discovered by the management or maybe by other officials other than the auditors. But if there was a possibility to identify this fraud on the basis of the set of procedures which the auditors are required to perform, then it becomes very, very important to understand why that fraud was not discovered. Because by applying the basic audit procedures, by applying the audit procedures which the auditor would have performed for the purposes of its audits of financial statements, then what was the missing element because of which that fraud could not get discovered? Again, if we go back to our discussion around the fraud and other aspects in relation to the audit of the financial statements, you remember one point, that detection of fraud is not the responsibility of the auditor. So again, when we are discussing this matter, we are not saying that the auditor should have detected the fraud. Not at all. That's not the objective and that's not the intent. So the responsibilities of auditor was not to detect that, and that continues to remain the same. But at the same time, it also didn't mean that if by performing some procedure, fraud would have come to the notice of the auditor, then the auditor will ignore that. Or the auditor could ignore such procedure, because that may become very, very risky, because that may materially misstate the financial statements and which may have a very severe implications. Okay, yeah. So auditor carries that responsibility which he needs to understand. In case any of these responsibilities are not carried out in a proper manner by the auditor, then the auditor will also have certain liabilities. So there are also certain implications which may be required by some of the provisions of the law and which will have to be faced by the auditor. Yeah. So we'll get into some of those liabilities which may arise on the auditor and in what situations. So let's understand this para to get the perspective around it. First of all, a member of the accounting profession, accounting means audit profession, when he is in practice, offers to perform a large variety of professional services and also holds himself out to the public. Public means public at large or the stakeholders. As an accountant means as an auditor qualified to undertake these assignments. Means the public or the stakeholders get the confidence that the auditor has the skill set, he has the capability to ensure that those assignments will be carried out in the manner in which they require. When therefore he is appointed under a statute or under an agreement to carry out some professional work, it is to be presumed, therefore it is to be presumed that he shall carry them out completely and with care and diligence, expected of a member of such profession. In view, however, of the fact that the standards of competence may vary from individual to individual, and also the concept of function of audit and that of its technique may vary from time to time, undergo change, the auditor is expected to discharge his duties according to generally accepted auditing standards. Generally accepted auditing standards are what? Those essays that we talk about, and various other practices which are required to be looked at. Yeah. So this is something which is very, very important. Just give me 1 minute to be taken care of by the auditor. And that's why we are saying that auditor should not be negligent in carrying out his professional responsibilities. So negligence, if we look at the professional negligence, what is this negligence on the part of the auditor? Now negligence could be in relation to the duty or responsibility of the auditor. It could be about occurrence of breach of duty, or it could be in relation to the loss or detriment. So existence of duty or responsibility which is owed by one party to another to perform some act with certain degree of care and competence. If that is not done, if there is a breach of such duty means the duty of the auditor, that is again negligence. Loss or detriment being suffered by the party to whom duty was owed as a result of negligence. So all of these aspects are required to be carefully looked at. So we have some case studies which I am just skipping, so we can move on to the liabilities part. Okay, so we can just look at this case study quickly, a very small one and simple one to understand the context. So this is the decision in the Indian context which was taken. Let's understand the findings or the facts of the case. Mr. Dandekar had been engaged by Messrs. A. Mohammed and Company Madras and had prepared the statements of account and income tax return on the basis of accounts which were produced to him. During the course of assessment, it was discovered that Mohammed and Company had maintained two sets of accounts, the regular day books and the ledgers for the open market transactions, and a separate book for the black market transactions. While the former contained detailed entries relative to daily transactions, the latter contained only the consolidated entries made at the end of the week of the transactions of that week. At the end of the financial year, all the weekly entries in the separate set of books were to be called up and were entered in the regular books of accounts. Mr. Dandekar had examined only the regular books of accounts of the SSC and prepared the statements of account and the income tax return on the basis of these units. All the statements were signed by him, and there was also endorsement at the foot of the balance sheet that it had been verified and found to be correct. So there's a declaration which the auditor gave, or we can say this professional gave. This one not the auditor. Mr. Dandekar had forwarded the statements of account to the income tax officer, and while doing so had stated particulars of books of accounts that he had examined. Now let's see what was the judgment or what was the final decision in relation to this matter. On examination, the statements of account having been found to be wrong, the income tax department took up the matter against Mr. Dandekar and filed a complaint with the ICAI. Why ICAI? Because he was also a member of the ICAI, so he has to follow the ethics and all of these responsibilities of being a member. When the matter was subsequently considered by Madras High Court, it was held that Mr. Dandekar was under an obligation to perform auditing with due skill and diligence. Okay, so he had an obligation, which we all understand. Huh? If he did that, it will be difficult to see what further obligations he had in the matter and in favor of whom. The accountant means this person right now, is under a duty to prepare and resend correct statements of account of the assessee, and he should of course neither suggest nor assist in the preparation of false accounts. But he is under no duty to investigate whether the accounts prepared by the assessees are correct or not. The charge is that he owed a duty to the income tax department to himself investigate the truth and correctness of the accounts of the assessee and not merely to act as their post office in transmitting them, which is not true, which is not right. We do not agree that the respondent is under any such duty to the department, and therefore in this case it was held that there is no negligence on the part of Mr. Dandekar. Okay, yeah. So then we have a lot of case studies. I would suggest we can go through some of the one. Now we can discuss about some of the civil liabilities which may arise as per the Companies Act. So quickly on to that. Damages for negligence. Civil liability for misstatement in prospectus, where a person has subscribed for securities of a company. Now this is considered to be a very, very serious matter. So that's why whenever any such of IPO etc. are going on wherein the auditors are involved, that's why their procedures are generally very extensive. Where a person has subscribed for securities of a company acting on any statement included or the inclusion or omission of any matter in the prospectus which is misleading and has sustained any loss or damage. So the information first of all is misleading and the person has sustained loss or damage. As a consequence thereof, the company and every person may be liable under section 36 to pay compensation. Number 1. No person shall be liable under subsection 1, which is subsection. So under this subsection 1, no person shall be liable if he proves that having consented to become a director of the company, he withdrew his consent before the issue of the prospectus and that which was issued without his authority or consent. So this is in the context of a director. Or that the prospectus was issued without his knowledge or consent and that on becoming aware of its issue, he forthwith gave a reasonable public notice that it was issued without his knowledge or consent. Okay, so that's how he can protect himself, provided he would have been acting in this manner prior to this problem which he is facing right now. Third, that as regards every misleading statement purported to be made by an expert, or contained in what purports to be a copy of an extract from a report or valuation of an expert, it was a correct and fair representation of the statement, or a correct copy of, or a correct and fair extract from that report or valuation, and that he had reasonable ground to believe and did up to the time of issue of the prospectus believe that the person making the statement was competent to make it, and that the said person had given the consent as per the required laws to issue of prospectus and had not withdrawn the consent before delivery of copy of prospectus or to the defendant's knowledge before the allotment thereunder. Yeah, so that is how the directors or the officers can be protected. Third, notwithstanding anything which is contained in the section, so that means whatever we have discussed so far, where it is proved that a prospectus has been issued with intent to defraud the applicants. So prospectus issued with the intent to defraud the applicants. Every person who is referred to in subsection 1 shall be personally responsible. So every person referred to in will be personally responsible without any limitation of liability. So there is no limitation on the liability for all or any of the losses or damages that may have been incurred by any person who subscribed to the securities on the basis of such prospectus. Okay. Now in this case, it's important to understand as to who is an expert. The term expert as per the Companies Act includes engineer, valuer, chartered accountant, company secretary, cost accountant, or any other person who has the power or authority to issue a certificate in pursuance of the law. The liability would arise if the in pursuance of the law, also that under the law a statement may be considered to be untrue. Which statement? The statement that we discussed in subsection 2. Not only because it is so, but also if it is misleading in the form and the context in which it is included. The liability would arise if the written consent of the auditor to the issue of the prospectus, including the report purporting to have been made by him as an expert, has been obtained. Next is the liability for misfeasance. What does it mean? Misfeasance implies breach of trust or duty, which is very important to be required, which is very importantly required to be maintained by the professional or by the auditor. The auditor of the company would be guilty of misfeasance if he has been guilty of any breach of trust or negligence in the performance of his duties, which has resulted in some loss or damage to the company or its property. Okay, therein again the auditor would be held liable for any of such matters. So these are all case studies which are in the context of these matters, but this is a very important point now for your understanding. In the various cases means all of these cases, the court cases which have had happened, it may be observed that when the auditor has been found guilty of professional negligence, and loss has been suffered, the courts have held that amount of loss should be made good by the auditor. For instance, in a particular case, under civil action by the liquidator, auditor was held liable to make good jointly with directors dividend paid out of capital. Where, however, the loss has been occasioned through the negligence of directors, the fault of auditor in failing to verify the asset has been considered to be only technical and only nominal penalty has been imposed. Okay, yeah. Then we can move on to the next type of liabilities, which are criminal liabilities under the Companies Act. Criminal liability for misstatement in the prospectus. So we discussed about the civil liabilities. Now we are talking about the criminal liabilities. As per Companies Act, where a prospectus issued, circulated or distributed includes any statement. Prospectus includes any statement which is untrue, misleading in the form or context in which it is included, or where any inclusion or omission of any matter is likely to mislead. Every person who authorizes the issue shall be liable. Every person who authorizes the issue shall be liable. However, if the person proves that such statement or omission was immaterial, or that he had reasonable grounds to believe and did up to the time of issue believe that the statement was true, then this liability will not arise on that person. But this is something which the person will have to prove. He will have to prove his innocence. Yeah. What is the punishment? So as per the Companies Act, if any of these return, report, certificate, other documents are made, a person who makes a statement which is false in any material particulars, knowing it to be false, or which omits any material fact, knowing it to be material, he shall be liable under section 447. Now, as per section 447, what is the punishment for fraud? Without prejudice to any liability, including repayment of any debt under this act or any law for the time being in force, any person who is found to be guilty of fraud involving an amount of at least 10 lakh or 1% of the turnover of the company, whichever is lower, shall be punishable with an imprisonment for a term which shall not be less than 6 months. So imprisonment not less than 6 months, but may extend to 10 years. And so that means both of them will arise. One, imprisonment will arise, and he shall be liable to fine which shall not be less than amount. Next is fine. So one is imprisonment, second is fine, not less than amount involved in the fraud, but which may extend to 3 times the amount involved. Okay, so that means in this case both the things will arise, imprisonment and fine will arise. It may be noted that where the fraud in question involves public interest, the term of imprisonment shall not be less than 3 years, because the idea is to protect the interests of the public always. Okay, yeah. It may also be noted that where the fraud involves an amount less than 10 lakh or 1% of the turnover of the company, whichever is lower, and does not involve public interest. Main point is does not involve public interest. Any person guilty of such fraud shall be punishable with an imprisonment for a term which may extend to 5 years, or with fine which may extend to 50 lakh rupees, or with both. Next, direction by tribunal in case auditor acted in a fraudulent manner. Now, as per the section 140, tribunal either suo moto or an application made by the central government or by the person concerned, if it is satisfied that the auditor of the company has directly or indirectly acted in a fraudulent manner. So tribunal where the auditor acted in a fraudulent manner or abetted or colluded in any fraud, it may by order direct the company to change its auditors. Yeah. However, if the application is made by the central government and the tribunal is satisfied that any change of auditor is required, it shall within 15 days of receipt of such application make an order that he shall not function as an auditor, and central government may appoint another auditor in his place. Where it may also be noted that an auditor, whether individual or firm, against whom final order has been passed by the tribunal under this section, shall not be eligible to be appointed as an auditor of any company for a period of 5 years from the date of passing the order. And the auditor shall also be liable to for action under 447 of the Companies Act. Okay, yeah. In this case, liability shall be of the firm, wherever there is a firm, and that of every partner or partners who acted in fraudulent manner or abetted, colluded in any fraud by or in relation to the company or its directors or officers. So then again, we have certain cases wherein the auditor has been held to have incurred the criminal liability. You may just go through some of them. Cases concerning the misconduct of auditors under the Chartered Accountants Act. The code of conduct of an auditor should be taken into consideration, and different circumstances under which disciplinary action can be taken against a member. The decisions in a number of cases can be referred to. It is important, however, for the students to understand what constitutes gross negligence. In terms of clauses 5 to 8 of this part of schedule of the Chartered Accountants Act, two decisions by the Indian courts which have become legal classics have also been given in this context. Okay, so I'm not really getting into all of these decisions, which you can just go through later on. Okay, now moving on to the next part, that is about liabilities under the Income Tax Act. So can you see liabilities are moving in from various sides onto the auditor. Now income tax also contains certain provisions in respect of liabilities for the auditor. In connection with proceedings under the Income Tax Act, Chartered Accountant often acts as authorized representative of his clients and attends before an income tax authority or appellate tribunal. So basically he represents the client. His liabilities under the Income Tax Act are following. So there are various sections, so we can just go through the requirements of each and every section. First, 288. A person who has been convicted of any offense with any income tax proceeding or on whom a penalty has been imposed under the said act, except under certain clauses of section 271, is disqualified from representing an assessee. The Chief Commissioner or the Commissioner of Income Tax has been given powers to determine the period of such disqualification of that person. Okay, and further, as per this subsection 4, no person who has been dismissed or removed from the government service after 1st April 1938 or who has been convicted of any offense connected with any income tax proceeding or on whom a penalty has been imposed under this act other than penalty on him under this clause of 271 or 272A, or who has become insolvent or who has been convicted by a court for an offense involving fraud, shall be qualified to represent an assessee under subsection 1 for all times in case of a person referred to in clause A. What is clause A? This one, clause A. For such time as the principal chief commissioner or the chief commissioner or the principal commissioner or the commissioner, these are all in the context of income tax, may by order determine in the case of person referred to in clause B for the period during which the insolvency continues in case of clause C, and for a period of 10 years from the date of conviction in case of clause number D. Okay, now moving on to subsection 5. If any person who is a legal practitioner or an accountant is found guilty of misconduct in his professional capacity by any authority entitled to institute disciplinary proceedings against him, an order passed by that authority shall have effect in relation to his right to attend before an income tax authority as it has in relation to his right to practice as a legal practitioner or an accountant, as the case may be. Who is not a legal, or if any person, next situation, who is not a legal practitioner or an accountant is found guilty of misconduct in connection with any income tax proceedings by the prescribed authority. The prescribed authority means Chief Commissioner or the Commissioner having requisite jurisdiction may direct that he shall henceforth be disqualified to represent an assessee under subsection 1. Okay. A chartered accountant found guilty of professional misconduct in his professional capacity by the Council of ICAI cannot act as authorized representative for any matter within the definition of member in practice for such time that the order of council disqualifies him. This was about the liabilities which may arise as per section 288. Now moving on to section 278. If a person abets or induces in any manner another person to make and deliver an account or a statement or declaration relating to any income or any fringe benefits chargeable to tax which is false. Okay, so he is delivering an account, statement or declaration which is chargeable to X tax, and that comes out to be false, and which he either knows to be false or does not believe to be correct or true, or to commit an offense. Okay, so he knows that is false, he knows that it is not true, or he has given that to commit an offense. In such a case, he shall be punishable. In such a case, he shall be punishable. So, he shall be punishable in this way. In a case where the amount of tax, penalty or interest which would have been evaded if the declaration, account or statement has been accepted as true, or which is willfully attempted to be evaded, exceeds 25,000 rupees with rigorous imprisonment for a term which shall not be less than 6 months. So there is a term, imprisonment, not less than 6 months, but may extend to 7 years. And fine will also come. So you can see fine is always there. Imprisonment may or may not be there. Fine will always be there. In any other case, with rigorous imprisonment for a term which shall not be less than 3 months, but in any other case, but which may extend to 2 years, and of course, fine will come. Okay. Moving on to the next section, next provision of the income tax, that is about Rule 12A. Under this rule, a chartered accountant who, as an authorized representative, has prepared the return filed by the assessee, has to furnish to the assessing officer the particulars of accounts, statements, and other documents supplied to him by the assessee for the preparation of the return. Now this is very, very important. So assessee has chartered accountant prepared the return, but let's suppose there was problem in some return, and that's why income tax department or the assessing officer may require the chartered accountant to produce all the documents which were made available to him by the assessee, on the basis of which return has been provided. Where the chartered accountant has conducted an examination of such records, he has also to submit a report on the scope and results of such examination. The report to be submitted will be statement within the meaning of section 277 of the Income Tax Act. Thus, if the report contains any information which is false and which the chartered accountant either knows or believes to be false or untrue, he would be liable to rigorous imprisonment. There is rigorous imprisonment which may extend to 7 years and fine. Okay, yeah. Moving on to the next provision, 271J of the Income Tax Act. As per the new section inserted by Finance Act, so this is something which came 2-3 years back. If an accountant or a merchant banker or a registered valuer furnishes incorrect information in a report or a certificate under any of the provisions of the Act or rules made thereunder, the assessing officer or the Commissioner Appeals may direct him to pay a sum of 10,000 rupees. Assessing officer may direct him to pay 10,000 rupees for each such report or a certificate by way of penalty. Or a certificate by way of penalty. Yeah. Okay. So these are some of the liability implications which may arise in relation to the auditors, and again, to say the auditors is not really the complete term, because some of these liabilities we have understood are not really limited to the auditors. Some of them also extend to the professionals. So it's all about carrying out the professional responsibilities with due care and diligence, or we can say that negligence should not happen. So the professional negligence should not be there, and this again will be the onus of the professional to prove that he was taking due care, he was diligent in his duties. Okay, because as a professional it becomes his duty, it becomes his responsibility, and that is why other stakeholders or the other users of certain documents or reports are relying on them, and with an understanding that these have been certified, or these have been provided, or these have been examined or audited by the professional who is supposed to follow such diligence or this professional expertise on his part. Okay. Yeah. So with this, we are done with our discussion, and as you all understand that we have come to an end to our discussion in respect of all the topics that we had to cover. So I'm just hoping that you would have understood all of these provisions. You would be able to revise all of these things the way you would have planned, and this session or all of these sessions would have really been helpful to you. So what we can now do is, because today is the last session that we have, in case you have any queries, any doubts, you can just feel free to send your queries, and we can just discuss all of those queries. That's why we have just reserved this time, and we can also discuss some of the things related to your exam or any of the questions that you may have. I can also see a couple of queries coming in from your side, that is about the exam or the MCQ test, etc. Whether those are available or not, and other query which comes from Supriya is about to understand whether they need to learn all of these provisions which are mentioned in the case. So I would say provisions are definitely required to be learned, but I'll not say the provisions which are mentioned in the case are required to be learned. Yeah, but definitely all of these provisions you should know, and you should also go through at least some of the cases. And if you can go through all of these cases, that will only enhance your understanding about all of these provisions. Yeah. So any more questions, any more doubts from your side, you can just feel free to send that, and we can have a discussion on that. I'm just hoping that all of you would be preparing for your exam, and you would be on the track in terms of your preparation, and you would be better guided now with all of these sessions which have been conducted. Yes, so anything from your side that you want to have a discussion on? Okay, so then if maybe I would request Ms. Karuna, maybe if you can just help to resolve this query. Maybe Karuna, if you are around, you can just help with this query. This comes from Supriya. So Supriya is asking, will there be any test before the exam, like MCQ test, etc. So she's looking for some documents around the MCQs or the preparation documents, so that she can prepare, and which can really help all the students. So Karuna, if you are around, if you can just help to understand the students around all of these documents, on the basis of which they can further practice. Okay, so I think Karna seems to be getting connected on this. In the meantime, I have this query from Hiba. Hiba is saying, can you suggest some presentation techniques in the exam so that we can get more marks?
I think we will be taking session tomorrow. So on presentation technique and other, in case if there are any queries on specific topic, they can ask. And actually I was having network issue. I missed something in between. Was there anything for me, Achal?
Not for you specifically. I thought that you will be the better person to answer this. One thing which you just help to understand is that there's some counseling or presentation session tomorrow. One query comes from Supriya, wherein she wants to understand around the material in relation to MCQs or in relation to some of the questions basis which they can practice, and they can so it's more of like mock test which they may be looking at. So this is something, if you can let them know as to how they can access, that will be helpful for them.
Yeah, definitely. Supriya, we have started our counseling session. For today, we have accounting paper and SFM paper for final level, and auditing tomorrow will be having session. And for MCQs and questions for practice, it's given on website. In fact, in our study material, in Test Your Knowledge also, we have inserted MCQs and certain integrated case scenario based questions. In addition to the same, you can refer RTP and mock test paper. And if you have any specific query, you can connect with us tomorrow. In the morning, we have special counseling session, specially for you.
Yeah, sure. So I think this will be helpful for all the students. This will be helpful for all of you. Yeah, sure. And anyways, because you have this detailed session which will help you understand all of these techniques, presentation, etc. So I think with this, we can just conclude our discussion now. Karuna, if you have something to add, you can just please add. Otherwise, I am done from my side, and we can just wrap up this discussion. And before that, I would just like to thank all of you once again for your time and for your participation. And thanks Karuna, and thanks Jay also. You have been working very hard at the back end for the benefit of the students. Thanks so much to all of you.
In fact, Achal, we would like to thank you too, because you are having so vast knowledge, practical experience, and you have wonderfully taught the students. And I think they have learned a lot. In fact, we have also learned a lot from you. So, student, if you have any query, because Achal is the best person who can answer you for your queries, so you can ask him. And of course, tomorrow we will be there for mock test paper discussion and any other specific queries for presentation or anything. But for any technical query right now, if you are having during the session for regarding any session, you can ask right now, or you can ask tomorrow also. But if you have any specific query, you can right now ask Achal. And Achal, if you can also share some tips to our students, how they can excel in auditing, because auditing is a theoretical subject wherein they got lesser marks. So how they can excel, if you can give certain tips, and we can be...
So I don't really have much to say because I think this is the same approach that we have discussed or followed throughout our discussions. So my only advice to all of you will be to consider this this subject to be more of practical rather than theoretical, because the moment you change your approach of considering this subject to be a practical subject rather than a theoretical subject, automatically the way you are approaching in terms of answering the questions will change. Wherever you get stuck in the exam, so let's suppose you get any question and you believe that you really don't know because you may not have read that concept at all, just try to think that as an auditor, how would you have dealt that situation? So even without knowledge of that, so in a very, very logical manner, how you would have dealt that situation. Maybe some of the legal provisions you may not know, but I'm sure that with the logical approach that you would follow by putting yourself as an auditor, you will be able to definitely answer that question. And that is how you can just, try to approach this entire subject. But for sure that this subject is a practical subject. This is not really a theoretical subject. And at the same time, this subject also requires you to understand various other topics, be it accounting, be it law, be it income tax. So all of those things are required. So that's why it's a good mix wherein you can just apply all of these concepts and then do a sort of analysis of this. So wherever you get any question in the exam, you'll have to just remember that audit is not something which is additionally required. It only requires you to remember all of the other provisions or all of other topics. If you understand all of other topics, then definitely there's nothing significant which will bother you in the exam. So I think these are the couple of things which you need to remember in respect of audit, and that is how I have also approached audit throughout my career or whenever I go through any of the provisions, and hoping this should also help you. All right, so I think with this we can just conclude our discussion now. Thanks to all of you once again. Yeah, thanks so much.